Meanwhile, America's banking crisis is still hurting the world. 2 American banks failed earlier this month, and this is the fallout. America's biggest banks have taken a hit. The big 4 banks lost $52 billion. Global markets suffered losses too. This month, they've lost as much as $1 trillion. A major bank in Europe has been sold. Credit Suisse is being bought by rival UBS. The deal was engineered by the Swiss government. Now, the world often talks about America's military firepower and how lethal its weapons can be. But US banks can be just as lethal. In 2008, remember, they triggered a global financial crisis, and now they've caused yet another meltdown. The worst might be yet to come. A new report says that as many as 186 banks in the US could be in trouble. 186 banks. This is the finding of a study done by 4 American economists. They say more than 180 banks could, quote unquote, go the way of Silicon Valley. Silicon Valley Bank, or SVB, is based in San Francisco. It's where the entire crisis began. It was the first American bank to collapse. It had run out of money. The bank did not have enough money to pay its depositors. Now imagine the same happening to 186 banks. Apparently, they have the same problems, a high level of uninsured deposits and a significant drop of government bonds. We've told you about this before. These banks bought government securities, government bonds. They're considered a safe bet, a good investment. So the money that people deposit in banks was parked in these bonds. But soon the value of these bonds declined. That's because America's central bank, the US Federal Reserve, jacked up interest rates. It brought new bonds into the market, and they offered better interest rates. So the old bonds became worthless. They lost their value. And the banks which are under pressure still hold a sizable number of the old bonds. SVB dumped its bonds at a loss. It had no other option. It had to pay the depositors. The bank lost almost $2 billion in that transaction. Ultimately, it collapsed. What happens if the same story repeats at 186 banks? Needless to say, the losses will be massive. In fact, I have a copy of the study with me. Listen to what it says. Even if only half of uninsured depositors decide to withdraw, almost 190 banks are at a potential risk of impairment to even insured depositors, with potentially $300 billion of insured deposits at risk. If uninsured deposit withdrawals even cause even small fire sales, substantially more banks are at risk. So $300 billion would be at risk, and it may have a ripple effect. That's what the study is saying. Already one more American bank is teetering. It's called First Republic. Its stock has been losing value. In 2 weeks, it has slumped by 90%. A few days ago, 11 banks stepped in to save First Republic. They injected $30 billion in cash. It was supposed to be a lifeline, but it hasn't helped. The cash infusion could not calm investors. The value of the stock is still falling. Wall Street CEOs are in a huddle, trying to come up with a new plan. If other banks are at risk, 180 others, like this report says, it wouldn't take a lot of time for the crisis to spread to other markets. This, remember, is the worst-case scenario. We can only hope it doesn't come to this.